Two ways that benefits are paid for long-term care: reimbursement, cash indemnity. LTC policies that pay different ways, you want to look and determine what's the right LTC plan for you. It's important to understand the differences. So one thing I talk a lot about when it comes to long-term care is having a care circle, having an idea of who you would want to be involved in your care. Doesn't always mean that they're going to provide your care. So part of my care circle, my children, now they're young now. I have 3 kids under the age of 4. And right now they wouldn't be doing a whole lot if I needed care. But in the future, they're part of my care circle. I don't want them to have to provide the care if they don't want to, but I want them to be involved in the care to at least know what's going on and being able to help make the best decision for myself and for my wife. So they're part of my care circle. Somebody in your care circle, your durable power of attorney, is going to be looking over your finances and will be making decisions for you, and you need a plan for that. Additionally, if you have a reimbursement long-term care policy, that person on a monthly basis is going to be submitting bills and receipts to send to the carrier to cover the long-term care. When the LTC pays out, it is always a reimbursement for a bill that's already been paid to cover those expenses. So you need to set up somebody who's going to handle that on a monthly basis. Services not covered under the policy will not be paid. So if there's certain expenses, let's say that mom's going to move into your house, she needs care, we're going to move her in, but all the bedrooms are upstairs and you want to build a bedroom on the first floor. We did that in my family. That's not a covered qualified expense. The hospital bed was, the stair lift that we put in the house was, but when we built the bedroom, not a qualified expense. That's not a home modification, that's a home upgrade. So there's certain expenses that might not be covered. One that you may never have heard of before that I think is very important when you think about reimbursement and you're thinking about your clients. Even if they're in a nursing home, well, everything's covered if they're in a nursing home, right? Who cares if it's reimbursement or cash indemnity? We talked earlier, health insurance does not cover long-term care. Vice versa, long-term care does not cover health insurance. And one of the biggest gaps financially that your client will have when it comes to long-term care is out-of-pocket medication and treatment. So in the nursing home, end of life, there's some expensive treatments, medication maybe that's being handed out. All of that is potentially an out-of-pocket expense. A reimbursement plan will not reimburse for medication or treatment. Nationwide pays cash indemnity. We pay the benefit out in cash. We cover everything. We cover care that hasn't even been invented yet, that will be in the next 20 years to help people stay in their homes longer. We cover taking out all the carpet in your home and putting in hardwood floors so you can get around easier. We don't just cover turning a van to make it handicap accessible. We can purchase the van with cash indemnity benefits and it's tax-free up to certain limits. So your client, when it's cash indemnity, they don't need to have somebody in their care circle who's collecting bills and receipts and sending those to the carrier every month. They know that they're going to receive 100% of the monthly cash benefit. There's going to be no restrictions from the carrier. They can cover the medication and the alternative treatment at end of life. And if there's any benefit left over at the end of the month that they don't need, instead of leaving it in the policy, they can take it out and save it in their account for later. So you can take more than you need and save it for later. Another one that comes up with cash indemnity, I just got a call today. It was a 73-year-old and a 76-year-old. The 73-year-old, we think we're going to be able to make an offer and give her insurance, but her husband is not insurable. So we're going to look at cash indemnity for her so that in the future, if he needs care and she also needs care at the same time, we'll pay her benefit to her. And if she uses some of that to cover her husband who was never insurable, that's fine. A lot of flexibility with cash indemnity that might be important. Carematters was designed for 3 things: familiarity, choice, and flexibility. So familiarity, and it's funny, working for a Fortune 100 company, we have a very large marketing team. One of the things that I do that I would recommend that you do, whether it's with Nationwide, Transamerica, Pac Life, but I think we do it well, go to the website that Jimmy showed you. This is something that if you have extra time right now during this pandemic and you're in your house, go to our website, download all of our client guides, our marketing material, and read them. And look for words that are set a certain way that you like the way it sounds, such as long-term care is not nursing home insurance. It's a funding option to help keep you in your home as long as possible. I didn't come up with that. It's in a marketing piece. Go through, highlight it, type up the best of the best into a Word doc, and work that into your client conversations. So as a professional in the financial service industry, make sure that what's the next thing that's going to come out of your mouth, and are you just trying to come up with it, right? Know what you're going to say, steal stuff from our stuff. We have marketing geniuses that went to school for it, and that's all they do every day. They went out and they tested and they said, what word in an email or in a video or in a marketing piece would drive the most attendance or most awareness to our products? And they tested everything. The word comfort, family, all these different things. They figured out that the word familiar drive the most awareness when talking about long-term care. You want to receive care in a familiar place. You want to receive it from somebody familiar in your home that you've been in. You've built this life protected, right? The premium and benefits are always recognized. In other words, they're not going to change on you. We build a product that works the way the client thinks it's going to work. The premium doesn't change, and the benefit is always going to be what it said. If it says $10,000 a month, they're getting $10,000 a month. It's a guaranteed death benefit. When it comes to choices, we have more premium options than ever before, and we've also added a few inflation options as well. Most Carematters and linked benefit, these are called linked benefit products. I'll tell you the easiest way that these are sold. And if I were going through this presentation with your client, I would mention, hey, this is an opportunity that we find a lot of clients are using to fund their long-term care. And it's the single premium design. And the reason why, even though it's the most expensive up front, you see it's the largest green bar on the left, it's going to save about 20% in premium by paying it up all at one time. But you might think, what client wants to put $50,000 or $100,000 into a policy all at one time? I don't have clients that can afford that. Consider clients that have money sitting in savings or CDs. Interest rates have never been lower. They are earning nothing on their savings or their CDs. We can reposition that asset. I call it moving it from one pocket to the other. We're going to reposition $100,000 from your CD. It's only earning 1%. We'll put that into Carematters. We can now get you $500 of long-term care. If you don't ever use the long-term care, your death benefit is, say it's $180,000. So it's $80,000 higher than you've paid in. And if you change your mind, you can get all your money back through the refund of premium after 5 years. That single premium is sold in every bank in the United States. It's $2 billion of premium per year just in that type of sales idea. Repositioning CD money or savings during this time where interest rates are so low. And the key is once that money's moved over to Carematters, Carematters is still an asset. They don't have to wait until they die or need long-term care to get their money back. They can cancel after 5 years on the single pay. But nationwide, similar to World Financial Group, we started this business helping farmers in Ohio. So we have the same focus on middle America and that's our mission, to help middle America prepare for and live in retirement. So living in retirement, we think about how can we help middle America prepare and get the same type of product that was only available to high net worth clients in the past. And we created the first product like this that has a pay to age 100. So if your client, maybe they only have $200 or $300 a month that they want to dedicate to this, they can still get a substantial amount of long-term care for just a few $100s a month. So we have 5-year, 10-year, pay to 65, and pay to 100 annual or monthly. And from a commission standpoint, we upfront all the commission as if they made a single premium payment. So go to mywfg.com. You can look up the grid for that if you're interested in the rates and things. But we made it so that no matter how they make the premium payment, the points are the same, the commission's the same. Inflation options. I mentioned earlier, we looked at the cost historically and into the future. A nursing home going from $100,000 to $180,000. That's about a 3% increase compounding annually over the next 20 years. So we created a new inflation option, makes sense, 3% compound. We kept our old inflation options, which were 3% simple and 5% compound. I find 5% compound to be too expensive for most clients, and I find 3% simple to not be enough. I think 3% compound is really the illustration that I run most often. It competes well. If you've looked at Pac Life, Premier Care, or One America, whoever in the past, other carriers, I get that. Other carriers have great products as well, but our 3% compound has put us at the top of the list in most scenarios, and that's on a cash indemnity benefit. We have the most flexible benefit in the industry. Flexibility, choice of care and services that are right for you. Right now, families are making a lot of tough decisions because they either have not enough funding to do what they want to do for mom or dad and they're in a tough spot, or maybe they don't have a plan that's quite robust enough to do what they needed to do. With Nationwide, again, it's cash. They can do what they want. They're in control. They get to do what's most suitable for them and their family. If the client never needs care, that's the number one objection I hear. What if I don't ever use the long-term care? You know, we talk about statistics. Statistics don't typically work. If you tell a client they have a 70% chance of needing long-term care, they're going to focus on the 30%. And I don't combat that. I don't say, no, you're definitely going to be the 70%. You're not thinking about it right. I simply say, I hope you're right. I hope you are the 30%. But that's why I'm showing you a solution where if you are, you still get your premium back in your death benefit, and that's guaranteed. And we're going to keep that asset liquid because there's a refund of premium. You can get your money back out after, and again, there's different designs. You can choose to run it with or without the refund of premium. And then we eliminate the monthly paperwork. Linked benefit built on a life insurance policy. That means that there's going to be immediate death benefit available, as well as the long-term care. It's already leveraged from day one. The LTC benefit is generally paid out tax-free. There is a limit, but it's pretty high. It's $11,200 per month. That's called the HIPAA per diem. You can take up to $11,200 per month out of your policy, spend it on anything you want, and it's still tax-free while you're still alive. That's a pretty cool way to get long-term care. We've had policyholders that have gone on claim and their families spread out across the U.S. And mom's last wish is she wants to have the family together one last time. And they've used some of their funds to pay for airfare and hotels to bring family in to see mom. So there's a lot of different things you can do with it. I go out and Google, just type in future LTC technology. We have not enough nursing homes and way too many people that are going to be retiring and needing long-term care in the future. Companies have to figure out, the government, China, Japan's already there, the US, these large countries, how do we keep people in their homes as long as possible? Because we don't have enough facility or caregivers to go around. And it's going to be technology. It's going to be different technology that you can't and I can't even imagine. That technology is not guaranteed to be approved on every policy. But with Nationwide, we pay it out, income tax free, in cash. It can cover that future technology. And there's cash value as well. So if you have the refund of premium, that typically will be higher. But if you choose to run it without the return of premium option, you can get more LTC. There will still be guaranteed cash value in the policy. One illustration so that you can see, and then again, this is a client approved presentation, so you can actually show some numbers. This is a 42-year-old male client, $250 per month, paying to age 100. I guarantee you've never seen a product like this in the industry. It is one of a kind. $250 per month. He pays to 100. That's a guaranteed premium, won't go up. 3% compound. That first green bucket, that's his death benefit. So it's $107,181 starting from day one of the policy. If he needs long-term care, he gets to take that death benefit and it's going to pay out over a 2-year period. That's why you see 2-year benefit. After 2 years, his death benefit and LTC rider is gone. Then he moves into that second bucket in the light blue. This is called the extension of benefit. This is why this is a linked benefit policy. It's linked to basically a standalone LTC policy. So once he uses the first $107,000 over 2 years, now he gets 4 more years of long-term care, another $214,000. So for $250 a month, he gets $346,000 of LTC benefits. But that's if he goes on claim right after buying the policy. If he doesn't go on claim until he's 80, look at the right-hand side towards the bottom, $1,066,000 of long-term care benefits that will pay out in cash, tax-free over 6 years. Even if he uses the LTC and the death benefit goes away, there's still a 20% residual death benefit. So what other product do you know that for a guaranteed premium of $250 a month can get you $1 million of long-term care paid out in cash, no restriction? And if you don't use it, you don't lose anything. You have a death benefit at least equal to the premiums you paid, and you have guaranteed cash value that if you change your mind, you can get some or all the money out. And that's Carematters 2. That's why I think it's important that you add this to your toolbox. You're probably still going to talk to LTC Rider the most with clients because it is that kind of flexible. It does it all. You can have income, you can have death benefit, you can have LTC. But I think we often sell ourselves short as financial advisors in that we look at one product and one product only. That for some clients, this 42-year-old might say, hey, I want to buy an IUL accumulator. I'm going to overfund it, and I know I'm going to use that for income when I turn 65. So I don't want the LTC rider on there. That wouldn't do anything for me when I'm 80. Instead, I'm going to buy separately a second policy for $250 a month and get $1 million of long-term care. And I can use all $1 million of LTC without having to touch my life insurance or my annuity, maybe my New Heights annuity or my 401k, whatever it is. It becomes $1 million of asset protection. It's a second policy. So keep this in your toolbox. Understand the product at least to some degree. Aaron and Jimmy and I are all happy to help you. If you have a case, let Aaron know. We can run illustrations. We can talk to an underwriter. We can get you in front of the right person. Last, I just want to finish on this slide. We'll see if we have any questions. The Care Guide Network. This is a free service to anybody that's ever purchased long-term care with Nationwide in the past. This includes the LTC rider. So if you've sold maybe our IUL with an LTC rider, make sure you pay attention because this is good news. It does everything that you see on the screen. It's the phone number that your client can call. When they go on claim, the family member has access to this resource. So even if you fund a policy, that might not be enough. Now the family has $10,000 a month, but they don't know what to do with it. What care facility do we use? How do we modify the house? Who do we turn to? This is a concierge service where they call a phone number and they're able to get help. But starting in January, we updated it. And we partnered with a team called Silver Brick Road. They're the best at this in the industry. And they have a website, silverbrick.com/nationwide. And we will email you information on this. Now your client has the phone number they can call, but the family can also get on this website. It's available to policyholders who have purchased Carematters, Carematters 2, or any of Nationwide's LTC riders in the past. So if I'm in your shoes and I've sold Nationwide LTC before, maybe call up that old client who's not expecting a call, and you're able to tell them about a free service on a policy that you've already sold them. I would appreciate that phone call, right? Hey, I'm not here to sell you anything. You bought an IUL with LTC rider 3 years ago. I wanted to let you know that you now have access to this website. You've been sent the information. Go on there and you can create your own plan and make sure you're more prepared than ever. And then maybe on that call, you can ask for a referral. By the way, have you shared this with anybody in your family? Is there anybody that I maybe could reach out to? And you might be able to expand that conversation, leading to more sales. Silverbrick.com/nationwide. I'm only going to spend about 60 seconds, so I'll talk fast. But this deck we can send you. We have some information. If you own Nationwide's LTC products, you can go to this site and you can go ahead and sign up. It's already on there. Things that it does, the first thing, you create that care circle that I talked about. So this would be putting your family members, your friends in here, so that if you do have in the future a need for LTC, the family can log in and they already see your plan. They already see everybody's information. Your calendar can be uploaded on there and everybody can share. Let's say that I visit mom today. I can let my brother and sister know, hey, I was at mom's house and we're all connected on this site. We all know what medication she's on, what type of treatment she is receiving. We're all connected in the care circle. You can do an independent assessment to find out what maybe, for example, home modifications you need to do. Maybe mom has Alzheimer's and you need to make sure you turn the water heater down so she doesn't burn her hands when she's washing her hands. Things like that you might not think of. And then the coolest thing I think on here, search for care. If we had time, I'd pull up a website, type in your zip code, 200,000 facilities will pull up for the whole US, but for your area, it'll show you every home health care agency and nursing home. You can compare them side by side to see what they offer, if they have beds available, what number to call, and what kind of services that they provide. There's a library of articles and videos and things for the family to watch and to better understand long-term care going through that. And then there's a phone number, of course, they can call as an advocacy to help them as well. So with that, that wraps up my portion for the call. We'll send you that client approved Carematters presentation. If you have a seminar or you want us to do the seminar for you right now virtually, that's something that we could look at doing, or in the future when we all get back to some degree of normal, hopefully we can connect in that way. Silver Brick Road, I checked that out as well. And then to finish where I started, Carematters with the convenient underwriting, no paramed exam, no medical records, so maybe some increased opportunity there for you and your business. Any questions that we can answer?
Hey, Zach. Hey, Zach, it's Tony. Hey, thanks a lot. This was great. Quick question for you. What in terms of like minimum premium or maximum age, what are the details on this Carematters product?
We lowered the minimum age to age 30, and currently we go all the way to age 75, but that's an interesting question. It's a good one. Because of the low interest rate environment that we're in right now, with the Fed rate so close to zero, every carrier is looking at repricing these types of products. They're very interest sensitive. And we decided we're going to put off a price increase till mid-May to hopefully get some of these applications through. We are going to see a slight increase. We'll still be competitive. I'm not too worried about that. But do get the applications in because of that price increase. But we also decided that effective April 17th, we're not going to sell to clients over age 69. So this could be the last opportunity to get this type of product for a 70 to 75-year-old. And with Carematters 2, we got about 20% more competitive on price. But something else that I thought that I loved about the product was a 72-year-old, if they had 100,000 sitting in a CD, they could get 300,000 of long-term care, which is pretty good leverage at that age. That's until April 17th. We have a cutoff on that.
Okay. Well, that's good to know. Is there like a minimum benefit or minimum premium on this type of policy?
Yeah. So I think everybody, if you can still see my screen, if it's still sharing, you see my software. The minimum benefit is $2,500 a month of LTC. But what I do is I go into the software and I say premium. So let's say 55-year-old female premium, and I put $1. And then I say, all right, she's going to do a pay to age 100. She's going to pay monthly. I'll run it without inflation. Calculate. If you put $1 in our software, it'll force it up to the minimum premium. For single premiums, it's typically around $35,000 to $60,000, depending on the client's age. But here, for a 55-year-old female, $2,500 a month of LTC is $157 per month. So, I'm in my 30s. I can do about $100 a month.
So that's $2,500 of LTC benefit, not premium. LTC benefit.
Correct. $2,500 of LTC is the minimum. And you can choose. Do you want $2,500 a month for just 2 years? That would be the least expensive option. Or we can pay out $2,500 a month up to 7 years. That's the largest bucket we sell. That one's more expensive.
Okay. And what do you see as the ideal starting age for something like this? What's like the target market, or what do you guys see is the most business coming in? What age group?
The average age is around 58, but I say 50 to 65-year-olds. If they've experienced long-term care in their own family, they're going to be more open. You can get a little bit quicker into actually talking about long-term care insurance instead of needing to kind of warm them up to the conversation. But 50 to 65 is really the target. If they're coming to you looking for it, insurability is always an issue, is what I've found.
Okay, great. Well, great. Hey, man, that's a great job. And I want to also thank you. I know you were out here last fall at a seminar at our office, and we got great feedback on that. I know even personally some of my clients that attended, they really appreciated it, and they really enjoyed your story and how you shared the information. So thank you for that. And then last is a request. If you can get your actuaries to work on that car insurance reimbursement, that'd be awesome. We do a lot of business with that. See what you can do there.
We'll work on that.
Zach is flying straight to the top.
Yeah, right. Hey, that's great. But Zach, appreciate it. Jimmy, anything else you want to close us out with? And then I'll just got a few remarks.
No, I appreciate you having us on the call. Like I said, make sure you all are utilizing the resources that we have for you. I think it's a fantastic time to sell life insurance and long-term care. If we get somebody an IUL and that segment starts today, think how good that return is going to be this time next year. And then also perfect time to do policy reviews. If one thing's going to get people thinking about life insurance, it's the pandemic. So let's try and make the best out of this situation.